overall, the number of housing sales is down. Okay, so I'm looking at 8.4% from December. I don't know, the national median home price is like $396,000, and here in Wilmington it's even higher than that. It's closer to 4.25, I believe. 30-year mortgage rate, it remains in the low sixes, so say between 6.15 and 6.25. The median sales price in the Wilmington Cape Fear region at the end of 2025 was $412,500. And so that's higher than the national. So right now buyers have more choices, okay? So the inventory or the number of homes available for sale has gone up. Sellers can't just stick a sign in the yard and sell a house that afternoon. If you're thinking about buying or selling a home in the Wilmington area, then you know who to call. Hey everybody, Ashley Garner here with ABG Associates, and we're coming to you with the February 2026 real estate update. And so we'll look at things like national, then regional, and then we'll come all the way into like a market-specific Wilmington, North Carolina thing when it comes to the residential real estate market. Because obviously, when you're buying and selling a home, it's very local, and that's all that matters. Okay, so let's get started. And look, if you've got any questions, put them in the comments or email us directly, and we will, we'll get after those and get you some answers. So first, let's look at the big picture. So the macro economics, if you will, the national stuff, and we'll look at the broader housing picture. Overall, the number of housing sales is down. Okay, so I'm looking at 8.4% from December, and that's a pretty large decline when compared to the last 4 years. Now, what does that mean? I wish we knew. I think seasonality is a little bit of it, but that's kind of an adjusted seasonal number. So it really is a true decline in the number of transactions. And affordability is probably one of the main factors there. And, I don't know, the national median home price is like $396,000. And here in Wilmington, it's even higher than that. It's closer to 4.25, I believe. And that definitely affects affordability, along with mortgage rates. The fixed 30-year mortgage rate, it remains in the low sixes. So say between 6.15 and 6.25, somewhere in there, it kind of floats around. The one good thing is that rate has been relatively stable. So it's kind of stayed in that range for a while. And even though it's higher than most people remember, it's still stable. And stability is a good thing. One thing that definitely slows down action is uncertainty. And when people don't know what's going on, it makes them hard to make big money decisions. And we've seen a little bit of that. So how about multifamily? So on the multifamily investment side, our apartments are performing very well. Occupancy has remained stable, albeit a little bit lower than in the recent past few years. So, we're looking in the low 90% on occupancy. And that's kind of a nationwide theme, definitely here in the Southeast and North Carolina. Rent growth, I'd say, is also stable. This has not been the time for large rent increases in the market. Sometimes when we turn units over, we are able to increase rents, but it's generally speaking, rents are pretty flat. So, by the way, when we underwrite properties, that's a fancy word for when we do the math to see if we want to buy them. We use a very small rent increase in our pro formas and our projections. And the reason for that is you don't want to get caught thinking that you have to have this 5, 6, 7% rent increase in order to make your numbers work. That's where people get in trouble. Now, how about the cap rates? So cap rates are used to figure out kind of something that buyers and sellers use to decide what the value of a cash flow producing investment is. And the cap rates have softened a bit, meaning they've gone up. And when the cap rate goes up, that means price comes down. That's how that equation works. So if the cap rates go down, that means things are more affordable. It means that you usually can have higher returns into your models for your performance. And so I think if you're buying, then that's a good thing. If you're selling, then you want the cap rates to be as low as possible. So how about lenders? So lenders, there's lots of money to lend, but the lenders tend to be pretty conservative about where they lend it and who they lend it to and on what properties. And so even though there may be lots of money available to lend, maybe they have a lower loan-to-value requirement. And so then what that means is you have to go out and raise more equity or cash in order to put that with your loan amount and make the purchase. So yes, there's a lot of money out there, but it's not overly easy to get, okay? And I think that's important to know. So our focus here at ABG and Associates, ABG Multifamily, when it comes to these cash flow producing investments, is that we pay lots of attention to cash flow itself, not just appreciation and things like that, but knowing that if we have strong cash flow built into our model, that we can ride out all kinds of ups and downs or storms, if you will, in the market. And real estate is cyclical. I mean, if you think it's going to stay the same, you're wrong. It always changes. And so you have to be prepared. So that's what we do when we underwrite. We're conservative and make sure that we have a good cash flowing asset. All right, so now let's talk about the residential market in the Cape Fear region. So Wilmington, North Carolina is in the Cape Fear region, and that would include New Hanover County, Pender County, Brunswick County. And, you know, my ABG and Associates brokerage team is a team that helps people buy and sell residential real estate, whether that be, you know, a second home, vacation home, or their primary residence. So let's talk about that. So according to several sources, the median sales price in the Wilmington Cape Fear region is at the end of 2025 was $412,500 actually, and so that's higher than the national. If you remember that, I think that was like $396 we just talked about. So we're definitely higher, and just knowing what I know, you know, from like 10 years ago, that median sales price has gone up a lot. We have a lot less number of transactions now, but the median prices have gone up, and so the dollar volume sold is about what it was 10 years ago, but it makes it more, there's less transactions that are more dollars per transaction, if you will. So another way of interpreting that is in affordability. So prices and values have gone up. Now, if you're a seller, you love this because now you have more equity and wealth in your home or your real estate, but it does make it tougher when you're trying to move up or when you're trying to buy your first home, and we're seeing a lot of that right now. So what does the local market look like for buyers and sellers? So right now buyers have more choices, okay? So the inventory or the number of homes available for sale has gone up, and we're moving more towards a balanced market, balance between buyer and seller. When you have not much inventory, the seller tends to have the advantage. When you have too much inventory, the buyer tends to have the advantage. So we're right now we're in that seller's market area. So more inventory means we're going to balance out and hit that kind of middle ground where it's a balanced market. So that means buyers have more to choose from. They're not like, the houses aren't flying off the shelf like they were, but they're still very strong market. Now, sellers, especially sellers in certain specific like high desirability areas, sellers still have a good advantage because those areas are so desirable. But the difference is now the buyers have more to choose from, so they tend to be more selective. So sellers can't just stick a sign in the yard and sell a house that afternoon. They've got to actually put some effort into it now. They've got to price it right. They've got to stage it right, do the repairs, and all those types of things. And if those things are done, houses are still selling very quickly. If you don't price something right and you don't get it in good shape, then right now you're sitting on the market longer than you want to as a seller. Generally speaking, for the Cape Fear and Wilmington region, we are the beneficiaries of a wonderful climate, a wonderful place to live, a kind of lower cost of living as compared to other areas of the country. And so we have a very strong housing market for all of those reasons, and I would expect that to continue. Yes, it may slow down a little bit, but I would expect it to continue to be very strong here. Remember that we have the beaches here, Wrightsville Beach, Carolina Beach, Curie Beach, Figure 8 Island. All those things are big draws, not only for vacationers, but for people falling in love and wanting to buy their second homes or vacation homes here. For that reason, we have a wide range of prices. You can go to Figure 8 Island and buy houses that are in the tens of millions of dollars, or you can go to some markets and the newer home sales in Brunswick County and buy things that are below the median price. And so we've got a wide range, and that's good. The areas in Pender County and Brunswick County are still growing very quickly, and there's lots of new construction there, and that's a good thing also, because as our population increases, we need an increased supply of new homes. We have had a lot of apartments and build-to-rent things happen in the Wilmington area. That's to be expected in a strong market. But we still need more inventory. That's the ultimate answer for affordability, is more inventory. Houses take a long time to sell. It's not a quick overnight fix, but we are moving in the right direction because we do have that construction in those outlying areas. In the Wilmington, New Hanover area, we've got a good bit of infill construction in both like condos, apartments, and in single family. It's a much more mature market, so you've just got to find these pockets in where it's already been built, and you build new things that way. So here at ABG, I'll tell you a little bit about what we are doing right now. On the residential side, we're still working we're a relationship-based company, really, and most of the business that we do, we don't advertise on billboards or magazines. We have strong relationships built over the last 20 years with friends and neighbors and past clients. So we do a lot of business from that, and that results in a lot of referrals. Like, hey, somebody says, hey, my sister's going to be moving to town, and would you help her buy a house? Things like that happen. That's the majority of our business. So we are constantly in contact with buyers and sellers that are in our database, kind of keeping them informed on the market conditions, being there when they need us. Real estate tends, residential real estate purchases and sales, they tend to be driven by life events. If somebody retires, or they're downsizing their family, or maybe they have a baby and they need more room, or they got a new job and they're ready for a bigger house. Those are the reasons that people buy and sell their homes. And so our job is to make that as easy as possible during that transition. And there's usually some pleasure or pain reason. Unfortunately, sometimes things that aren't fun happen. People pass away, or lose jobs, and those things cause sales and purchases also. So our job is to be there as a trusted advisor to help people through those times in their life. On the investment side, so we are getting ready to close here in the next few weeks a large refinance on a large complex that we own in Jacksonville, North Carolina. That's going very well. It's taken a lot of work, but it's going to be worth it, and we'll do a whole nother video about that. So now that one is coming to a close, we're focusing heavily on what are we going to buy next, and we would like to continue our purchases of larger communities, 200 units or more in the Class B plus, Class A asset class, and so some newer product, lots of amenities, things like that. That's what we're doing here. Again, our underwriting, it tends to be pretty conservative, and so when we buy a deal, we're investors. We're not buying deals just to do transactions. We're buying deals because they're good investments, and that's what we're doing on the multifamily side. So listen, that's your update for this month. If you're thinking about buying or selling a home in the Wilmington area, then you know who to call. We're there for you. any of our area beaches. We specialize in Figure 8 Island and in Wrightsville Beach, but we help people in the other areas also. So we'd love to help you with your buying or selling your residence or a second home or an investment property. And then on the investment side of things at ABG Multifamily, we're always creating opportunities for people to invest as limited partner investors in the assets that we buy. So if you are an experienced investor, we have things that I think you would find very good to participate in. If you are someone who has not invested much or at all, these types of relationships are crucial in building your portfolio, because you can be involved in something like this in a limited partner way and benefit from our expertise and our systems and our processes, and then help build your real estate portfolio. Hey, and if you found this video and information helpful, please subscribe to our YouTube channel. It helps with increase our exposure. And also send some comments about what more specific info you would like about the real estate market. Real estate is all we do. That's all we've ever done. And we're here to make real estate easy for you. All right? See you next month.